Welcome to UBP TV. I want to share with you our views on the macroeconomic picture. First, US growth. US growth should rebound from 1.5% to 2.5% in the second half of this year and in 2014. The trend is positive on domestic demand and particularly on consumption. We have recently seen higher confidence, more job creations, and positive wealth effects. Capital spending should stay on a positive trend. The rebound in business confidence and industrial activity should lead to higher spending by companies. Exports have recently rebounded, and this should help the recovery. Given this, what will the Fed do? The latest labor figures have been positive. Unemployment has dropped to 7.4%, which is pretty much in line with the FOMC forecast of 7% at the beginning of next year and 6.5% later in the year. So the Fed will probably begin its tapering in September, reducing its bond purchases from $85 to $65 billion. But the US monetary policy remains accommodative, as there is still plenty of liquidity available in the economy. This is just a first step towards a less aggressive reflation policy. A few words on Europe. Indicators have turned very positive in Europe in the past months. The recovery is gaining momentum, and the recession should gradually come to an end in the next quarters. Business confidence has improved in all countries, and particularly in Italy and Spain, where it was very low and very depressed. Unemployment rate has begun to decrease slightly in Spain and Italy, and the Eurozone as a whole, so consumer confidence has improved. Exports are also recovering, particularly in the Mediterranean countries, and the trade balance has improved. Lastly, the IMF now recommends less fiscal drag and austerity and more measures to stimulate growth. So the Eurozone is on the road to recovery, and growth in the peripherals is expected to turn positive again over the course of next year. What can the ECB do? There is still room to reduce key rates further or inject more liquidity into the economy. But ECB, in its latest press conference on the official speech, gives the feeling that it will not go for more stimulus unless the recovery seems under threat. In conclusion, G7 monthly indicators are showing more positive signs, paving the way for higher growth. The US, the UK, and Germany should lead the way, followed by the peripherals next year, with an expected large rebound in Spain and Italy. Growth in developed countries should therefore rise from 1% this year to 2% next year. At the same time, new monetary stimulus is less necessary, and central banks will probably just deliver liquidity in line with economic developments. Thank you, and see you soon on UBP TV.